What's good, everybody? Today is September 2nd. We're about to just run through price action and how I fumbled this crazy 12-hour short. So without further ado, let's just hop straight into the analysis. All right, so the first thing let's just hop straight into is a complete top-down analysis, right? And the biggest thing to understand is that today was the end of this huge 1 hour, 4 hour, whatever market making model, right? So if you just zoom out a little bit, we're at all-time highs right here. We made an SMT at all-time highs, and then we started rejecting to the downside. At that point, we had all of this generated liquidity right here to go ahead and expect to get ran. And after we ended up running through this low last night, that validated us to now go ahead and take these two equal lows out because we ran through the area of inefficient price action. If you go ahead and watch my market fuel video, I explained that concept in depth, right? So this now becomes our bigger time frame sell side level that we're expecting to get hit throughout the day. And drawing this in right here, boom, boom. So we opened the market very, very close to that level, right? At 9:30, we're literally exactly close to that level, and we're expecting, because at 9:30, opening the market, we're literally right about here, right? So we're already generating liquidity to the downside to go ahead and run in line with that bigger, higher time frame buys, but we're just waiting for some kind of manipulation higher to then go ahead and take the short to the downside, right? This is a super high probability short right here that we're looking at, this one right here. And the only reason we didn't take it is because, number one, there's no PD array we're tapping into except maybe this 1 minute for value gap, which is fine for me. However, the issue here is that time and price happens, right? Literally, this trade starts rejecting at 9:27, right? Like minutes before market open. And for me, if you trade before market open, I'm fine with that. I think, you know, it's profitable, it's whatever, right? But there's too much of a possibility that the market just goes ahead and does something like this, right? Where it makes that change in state with displacement, then maybe pulls back, taps you in, market opens, stops you out, and then that becomes the manipulation. So then go ahead and push price lower, right? So I'm going to be waiting for this because I know this second trade is always going to be a higher probability, higher success rate, higher amount of times it happens than always looking for that first trade, right? But I mean, that's the game, right? It's a game of probability. So if you took this initial short, I mean, that was probably one of the best opportunities from the day. So good on you, right? After this, we end up seeing an SMT where ES over here doesn't end up taking this external low, but NQ does. So that puts in a way bigger higher time frame SMT, right? And I'm looking at this and I'm not expecting this to now start the market to be bullish, right? I'm not expecting to take a long. And the reason for that is this, right? The market at this point has nothing to go ahead and actually take, right? There's no reason for us to go long except that small SMT right here. That's literally a couple points deep, right? So looking at my bigger time frame, if the market, let's say, yeah, the market, okay, yeah, it wants to be long, it's whatever, right? The market wants to go higher. What is it actually going to target? I mean, there's no generated liquidity for the market to go target, right? And that's the whole point. Narrative is usually aligned with structure because structure is placed in because of narrative, right? And it's those rare times that structure and narrative are misaligned where you see straight up moves like this, right? And we're expecting, just by looking at this wall of price action, that if price wants to bounce off that level, respect that SMT, we have so many enemies in the way. We have fair value gaps here, fair value gaps, imbalances. We have an order block right here. We have equilibrium at this range, equilibrium at the bigger range before we end up going ahead and getting to this little area of fuel where the market can go ahead and eat up all this generated liquidity to then push higher, right? So we want to see price continue lower because if we look, there's just so much of a probability that the market goes ahead and does continue lower, just simply looking at where we're at, right? So zooming in a little bit deeper, the market starts to completely just pump, right? And this is pre-news. We have news at 10 a.m., right? I think it was some kind of unemployment. So we're expecting that to potentially become high of the day. And if you look, that's exactly what it does, right? 10 a.m. 10 a.m. happens right at the very end of this move where we manipulate, right? So that manipulates these highs, places in that SMT over here. So on whatever over here, just draw this out on one of these highs, right? SMT. And then we go ahead and we come into a 30-minute value gap over here, where on NQ, we're not inside of anything and we're just simply sweeping those highs and still looking back into bearish order flow. I mean, we're within this fair value gap if you want to mark that out, it's whatever. But yeah, so we're looking to see price now start to reject. And what we need is, number one, we need the market to have that news event, right? So we see that injection and we see, okay, where's the already existing drawn liquidity? Like, what does the market want to do right now? And see if maybe it wants to continue pumping higher, we just step away. Or if that news event gives us further conviction in our bias, right? So 10 a.m. happens and the market starts to just do nothing, right? 10 a.m. candle was, I mean, pretty small for a news candle right here, 10 a.m. Really didn't do a lot. I was expecting a much bigger movement to the downside to start that sell model. But we ended up seeing a very small loose news candle, and then we started seeing just lethargic price action until about 10:40, right? So during this time, the market is generating its own liquidity. If you watch my narrative video, I explain this concept in depth, and we literally just generate liquidity. while rebalancing. Where are we rebalancing to? The bigger time frame is already rebalanced while generated liquidity on the upside. I mean, not that much liquidity, but it's still there, right? We have liquidity here, maybe a little imbalance, some small imbalance right here, and then we have generated liquidity over here on ES, all that kind of stuff, right? So the market has rebalanced while generating liquidity, and then that's in the bigger time frame, back to this imbalance. Then on the smaller time frame, we've pushed lower into imbalance price action. We're now rebalancing on the bullish side of things, right? Back to equilibrium of this range, right? And now we're starting to push higher, right? So now we're going to rebalance for the downtrend, right? So we start to rebalance. Where do we rebalance to? If you zoom out to the 5 minute, we get a crazy accurate 5 minute candle wick, right? So we come to CE, consequent encroachment of that wick. We start to reject at that point, right? And the reason I can tell is because number one, that's a really big point that we want to see the market start to go ahead and reject off of. And then as well, once we see slow down accumulation at that point, I see an SMT at that area, which I already expect to reject right here. That's what starts the spark of our sell model, right? So I'm watching this and I'm confident that this ends up being the start of the sell model all the way down to those lows. So I place my position right here, right? I place my position, I don't get tapped. I'm a little bit salty about that one, no problem. And I mean, geez, that would have gone for about 7R, super efficient trade by the way too. And just got edged right there, so probably somewhere about here, right? So whatever. And that would have been a super efficient trade, but we simply just didn't get tapped, right? So I'm not caring about that all too much, right? I don't really care the most about that because I'm still looking and expecting to see more opportunity. Why? Because if we now zoom out at that point, now we have change in the state, and I'll explain why this is change in the state in a second. And we are now in a 5 minute sell model to the downside, right? Buy side of the curve. Now we have sell side of the curve, right? So we're expecting this to now become an efficient sell side of the curve. I'm now looking to see the part in which price action wants to pull back. And now I can look to trade the internal model, because think about this in terms of AMD, right? We have accumulated up here. We manipulated at this high, a kind of baby manipulation. And then we start distributing, right? In terms of distribution, every single retracement in the distribution phase is its own AMD model, its own market maker model, right? So that's why at this point, I'm expecting to see a market maker model every single time we pull back. And that's what ends up happening. So zooming lower, actually first I'll explain why this is 5 minute change in the state right here. You're taught that change in the state should go ahead and sweep this high, right? So change in the state should move like this, sweep the high, and then it should go lower. And this becomes the change in the state level right here, right? So change in the state would be right here. But let me explain why right here, this is change in the state, even though it didn't end up taking buy side, right? So there is one extenuating circumstance to the change in the state rule, right? And that's why a lot of people like breakup structure or market structure shift over change in the state. But with this rule, change in the state is really just the go of all time, in my opinion, right? So looking at this, the only exception to the rule is this, right? If we have bullish change in the state, right? We're expecting to see bullish change in the state. We need to see a high get put in and displacement past that high, right? The only way, and if something like this happens, we don't have change in the state at this point, right? Change in the state has not happened on this level because it didn't go ahead and sweep that liquidity. And instead, change in the state now happens on that next high, right? So change in the state would happen at this point, and there would be no change until we displace to that point, right? That's how change in the state works. The only exception to that rule is this, right? If we have within this candle right here, we have a really big wick, right? So this candle gets placed in and there's some kind of really large wick right here. And then we go ahead and we draw out consequent encroachment of that wick right here, consequent encroachment. And then we rebalance to some part of that wick, right? And it will look, I'll tell you guys what this looks like, right? And then from there, we see change in the state off of this point, right? That's the only exception. And it doesn't have to be consequent encroachment, but what it has to be is a wick and body closes right here. And then we see this second leg move down and body closes below the previous body closure, right? The bodies tell you the narrative, tell you the story of where price is actually going, and the wicks just do that damage, the stops out, the take profits, the filling orders, the manipulation on either side, right? So when bodies close lower than previous bodies, and we're also rebalancing to something on a lower time frame, this is its own market maker model. Buy curve up here, sell curve right here, and then buy curve all the way up to here, right? That's its own market maker model. That's exactly what we traded today. When you see something like that happen, that is the only other time that change in the state can happen at this high without having a sweep of that liquidity right there. So that's exactly what happens today. We see rebalance to consequent encroachment of that candle wick. We see bodies close above previous body closure, right? There is no previous body except maybe on the 1 minute, right? Which is not where we see the change in the state. That the 1 minute model ends up giving us, if you look, right here, even on the 1 minute, or 3 minute, this is same consequent encroachment rebalance, and then we see change in the state on that level 1 minute wouldn't work because 1 minute highs ended up, yeah, they ended up being, actually, hold up. Yeah, same exact thing on the 1 minute. This is the highest candle body right here. And if you look, we had SMT on that point. So now change the state becomes this level right here, right? It's all the same thing. This is the highest point where price pulled back to, where the bodies are, this is the highest body closure, right? So that's what really matters the most. And this is a very extraordinary circumstance that doesn't even happen a lot at all. So honestly, just something good to know, right? Because if you didn't take a trade because there was no change in the state, even though there's obvious displacement past that low, that's something to just have for your information so you never make mistakes like that again, right? So looking in, what did I actually end up trading? I told you guys I wanted to wait for that second stage, that reaccumulation, that retracement in the distribution phase. And the first one we end up seeing is right here, right? Now this happens in a retracement back to a fair value gap right around 11 o'clock. So this is what I end up trading. We see fair value gap retracement right here, right? Zooming into the 15-second. I'll wait for that pullback. And the second I start to see that generated liquidity at the lows, that's the signature, right? I want to see that generated liquidity start. So I see 2 equal lows get stacked in. I'm just watching. At this point, we place in that 5 minute fair value gap, we tap into it, and then we go ahead and we place an SMT right here at this level within that 5 minute fair value gap, right? That is manipulation in that area in which I already expect to reject. So I end up taking a short right here, stop right here at this change of the state, because that becomes change of the state level because we had an SMT right there. So change in the state, and then stop goes above that SMT high. That's the new protected high, right? So then we place our take profit at the end of that internal model. So that would have been a 1.63R. If you want to draw out Fib retracement and take it on the second standard deviation, it would have been right here. It would have ended up getting tapped, but that's only if we traded that model. So it doesn't even really matter, right? But this is the trade that you would have taken, right? And then from there, we leave runners to external levels, all that good stuff. And we leave runners all the way down to here for 12 point, what's the max we could have gotten if we bottom tick? Somewhere around 12.12. So just say 12R, right? We could have gotten a 12R trade if the market didn't just want to troll us at this high, right? So I'm really not mad about it. I mean, I followed everything I needed to do. And honestly, that this pullback right here, there is no reason that this was any higher probability than what this was right here. So, I mean, I saw the same thing. This didn't even have an SMT. So something interesting to look at. I don't think this did. Maybe an external SMT. Let's quickly just check that out. Yeah, no external SMT, no nothing, right? This is the exact same thing that happened up here, just literally right after. So it doesn't even really matter for me to get stopped out here, because if we look, I called the entire move. Like if I traded this, it would have been the exact same thing, just with an 8R, right? So it's a little bit different. I mean, I'm not mad about it. Some people be mad, but it's just the market telling you that, you know, you're doing something right. If you can call moves like this, and when you get stopped out at times like this, it's just God testing you, saying, don't get mad, you're doing everything right. And he's just giving you those little tests, and your job is to beat those tests every single time you get a single little test, right? So that's all I want to go through today. Yeah, I mean, this is a super textbook trade for me. There was really, yeah, I mean, this was nice to me. Nothing bad about this in my opinion. The only reason that I might be thinking, okay, yeah, the only reason this could have got stopped out is because if you look, that point that we took our entry was at 10:59. So this now becomes that open high low close, right? So in the 1 hour bearish candle from 10 to 10, this now becomes the end of the candle. So that becomes close till right here, which now becomes open of the new bearish candle. And that's kind of our open high low close manipulation move. But I mean, that's kind of nitpicking. I just think that was just one of those moments where price decided to go ahead and stop me out. So yeah, overall, I'm happy with this trade. I mean, this was a snipe, in my opinion. If this would have played, at least the prediction was 100% a sniper prediction. So overall, a really great day. I think this was a super great day to analyze the market, learn some lessons, build our psychology, or discipline, all that good stuff. So without further ado, I'm gonna let you boys go. Thank you all so much, and I hope you guys learned some lessons from this video. So yeah, sounds good. Peace out, boys.